Things get quite serious when we bring up Coinbase. These days, the cryptocurrency industry is just bonkers. The battle between bulls and bears is enormous. There is no better time than now for the approval of the Ethereum ETF. Things are getting crazy, so Shiba Inu investors are sounding the alarm. There appears to be just one option to rescue your investments, and they are in a state of panic. I don't understand, though. Allow me to clarify. Important notice. As of late, the Shiba Inu market has been anything but bullish. The asset has been quite unstable, unable to maintain a price above the threshold of local support. The departure of whales from the market is a clear indication that it is not yet prepared for a growth phase, which is contributing to the current decline. For the Shiba Inu community, who had hoped for better times, this is tragic news. The recent approval of an Ethereum ETF has sparked enormous excitement across the crypto industry and added complication to the issue. The acceptance of the ETF was a major step forward, so there was good reason to be excited. Unexpectedly, the wave of enthusiasm extended to Shiba Inu as well, with whales reviving their interest and trying to drive up its price. The difficulties Shiba Inu encounters in the present market climate are evident, however, in the fact that it has failed to sustain momentum despite this short-lived increase. The price of Shiba Inu has fallen below important support levels due to recent heavy selling. This fall demonstrates that it was unable to sustain its position above an important level. Meanwhile, big transactions have been on the decline, suggesting that major holders aren't as active as they once were. The future of Shiba Inu's market presence seems bleak due to the aforementioned causes. Take the previous week as an example. There were 341 significant transactions, but just 82 in the previous 24 hours. Big holders or whales are cutting back on their holdings, which would explain the precipitous decline in price. Even while 82 huge transactions isn't nothing, it's far lower than the peak, which was 4 times higher. You can really see the decline. It would be like witnessing a street with a modest crowd instead of a busy one. It is difficult to overlook the difference, which is substantial. Also, big transactions peaked at 5.7 trillion Shiba Inu last week, but in the last 24 hours they've dropped to 3.36 trillion Shiba Inu. This shows that large holders are taking a little break, but it also implies that the market is still under bearish pressure. This is a very intriguing turn of events. Anxiety in the market was warranted following the approval of the Ethereum ETF only 2 days ago. Where, therefore, is the thrill at this point? What caused the Shiba Inu's price to fall so drastically in spite of this good news? This development is perplexing. Here, though, is a solid breakdown of the current situation and what's to come. Trading has not begun despite the approval of Ethereum ETFs, establishing the exchange-traded fund ETF, checking for regulatory compliance, and getting the market ready to trade are all parts of this procedure. The market will not experience the full effect of the ETF approval until these preparations are finished and trading formally starts. Perhaps this explains why the enthusiasm hasn't resulted in a quick uptick in the Shiba Inu pricing. Many people were thinking this indeed. However, they appear to be oblivious to something crucial. Are you familiar with Grayscale? Several market crashes occurred because they dumped Bitcoin worth hundreds of millions of dollars immediately. After the Bitcoin ETF was approved, I have some analysis for you. In early 2023, Grayscale investors had the opportunity to purchase Bitcoin at a discounted price, which hovered around 48%. Many investors dumped their Bitcoin holdings the moment Grayscale's Bitcoin was transformed into an ETF due to the steep discount. However, in early 2023, investors might purchase Ethereum at a steep discount of over 60% through the Ethereum ETF. Upon the launch of ETF trading, many Ethereum ETF investors will likely cash out at this steep discount. The rationale behind this is simple. They may sell at market value and lock in substantial gains by buying at a discount, so it's a very appealing alternative for them. The whales may be holding off on investing for the time being because they expect prices to fall even more. And that's only scratching the surface. Bitcoin and Ethereum exchange-traded funds ETFs are already trading in Hong Kong, and the market flows differently there. The ability to examine current data in order to forecast future patterns makes this method clever. The entire inflow for Bitcoin ETFs in Hong Kong is $105 million, whereas the total for Ethereum ETFs is only $17 million. Roughly 16% of Bitcoin flows go through there. Furthermore, there is $10 billion in open interest on Bitcoin, but just $1 billion on Ethereum, according to the largest derivatives marketplace for us investors. Ethereum receives just 11% of the interest, suggesting that the majority of investors are more concerned about Bitcoin. This discrepancy shows that Ethereum's Volume is far lower than Bitcoin's despite high expectations. Prices keep falling and whales aren't buying, which might be due to this mismatch. Would you as a whale engage in a market when actual results are so disappointing compared to expectations? There is no logic behind it. This cautious approach could account for the present dearth of investment from major holders, but the surprising revelation regarding the Ethereum ETF isn't the only thing that has truly messed with Shiba Inu. Coinbase is involved, and there's more to the story. Coinbase has introduced Shiba Inu futures to its institutional customers. Outside of the US, according to recent announcements, many people were under the impression that Coinbase already had this capability, thus hearing about it put them into a panic. But it seems like Coinbase was blocking some users from using specific functionalities. Some people started spreading criticism towards Coinbase after this finding. To further understand, picture yourself as a long-time user of a service who mistakenly thinks they have access to every feature. The next thing you know, you're feeling left out or unfairly treated because you discovered that certain functions were only accessible to specific individuals. It appears that many are dissatisfied with this finding due to feelings of being misled or left out of things that they believed were available to everyone. Platforms like Coinbase face problems regarding transparency and fairness, which can lead to user irritation and disappointment. Coinbase probably limited access to this feature because of worries about regulations. In order to safeguard consumers from possible harm, regulators frequently set restrictions on leveraged trading, which is particularly problematic in the Bitcoin market. To ensure compliance and avoid hazards connected with high-risk trading methods, Coinbase may be following regulatory standards by limiting access to leveraged trading capabilities. This is where tensions rise in the dispute. It's interesting that authorities sometimes relax their stance on leveraged trading while approving activities like gambling that could be seen as dangerous or speculative. Concerns regarding regulatory objectives and risk assessments are prompted by this disparity. Some could say that leveraged trading is just like gambling in that it encourages risky conduct and the potential for huge losses. The difference between gambling and leveraged trading is that the latter takes place in the financial markets and has the potential to affect more than just the investors involved. Regulators' tolerance of gambling while limiting leveraged trading may seem contradictory to some on an ethical level. They could say that both of these things are very risky and could hurt people and the world at large. Ethically, this lack of cohesion in regulating systems raises concerns since it could give some actions more weight than others without adequately considering the repercussions of each. In any case, Shiba Inu's volume increased by 51% when the news spread that Coinbase had approved this new function. This enormous growth shows that Shiba Inu-related trade has recently experienced a meteoric rise. But other people may be feeling confused and overwhelmed because of the widespread market uncertainty that followed the Ethereum ETF incident. People may get afraid and hesitant to invest when they aren't sure what the market will do next. They may decide to wait for more definitive signs before getting back into the market. So what are your thoughts on the matter? Leave your comment in the space provided. Your comment would be greatly appreciated. If you're interested in learning more, just click on one of the videos displayed. We have reached the final segment of this video. If you found the video entertaining, hit that like button and then hit the comment box to let us know what you thought. When it comes to the YouTube algorithm, this is a huge help. Further, we ask that you forward this video to everyone you know. It is time to spread the word.